Hello and welcome to Trading the Trend on Wednesday, the 19th of April 2023. 3 weeks ago, we went short the Australian dollar versus the US dollar, and we lowered our stop loss last week to just above the last reaction high. And unfortunately, and this is a bit frustrating, we got stopped out. The market only went 11 pips higher before it reversed and went down again. So we lost about 105 pips on this trade. But these things happen, and that's why we've got risk management in place. So this is a first loser after having had 5 consecutive winners with regards to our Trading the Trend setups. So let's look at the trade we had on from last week, and we went long the Nasdaq at 12,893. But what I'm seeing here now is a loss of upside momentum, a loss of volatility, and the break of an uptrend. And therefore, I'd like to exit our long position around break even or at current levels with a small loss. So if we were to get out now at 12,976, we would incur a small loss here. So I would probably get out of that position because it does look short-term toppish with regards to the Nasdaq 100. Moving on to today's Trading the Trend, since it is a trend and also we do trade when we end a trend, I expect this recent downtrend channel to have ended and the downtrend to have ended because we've now risen above the 200-day simple moving average today, broken out of the downtrend, and have risen above the last reaction high, which was made at 134.20 on Monday, all of which tells me that the odds are pretty high that we are once again bouncing off around the 133 area and are likely to have a period of higher US dollar prices versus the Canadian dollar. So therefore, I expect a new uptrend to be formed here as we are bouncing off this key support area as we've been doing since November of last year. So today's Trading the Trend is to go long the US dollar versus the Canadian dollar at 134.30 with a stop loss below the current April low at 133 and an upside target at 137.